There are a lot of very good reasons why to open a bank account in Switzerland, but the main reason is clearly security. According to international statistics, Switzerland is clearly the safest financial center in the world. If you compare Switzerland to jurisdictions like Hong Kong, Singapore, to Dubai, to London and to other locations, actually there's no real alternative to Switzerland. Second reason is that Switzerland is the world leader in private banking. 25 to 30% of the worldwide assets are managed in Switzerland. This is an equivalent of around 8,000 billion. And the third reason is expertise. So the education standard in Switzerland is extremely high. And in addition to this know-how, customers value very much the secrecy and the discretion of Swiss private banking. There are two ways how to open a bank account in Switzerland. Either you show up in person or you do it remotely from abroad. What you have to do in addition is you show identification documents. So as a private person you show your passport, you show your curriculum vitae and you show utility bill. And for the company you show the extract from the commercial register and the articles of association. On top of that you have to prove how you made your money, what's the origin of the money which you made. For example, as a private person, when you sold recently a property, you have to show up, the sales contract of the property. And as a company, for example, you can show balance sheets and income statements. How much money does it take to open a bank account? So this depends a little bit from bank to bank, but in general, Swiss banks accept customers from abroad if they have around 500,000 to 1 million Swiss francs, or the equivalent in euro, US dollar or English pound. Otherwise, the banks say that the bank account is not really profitable and they don't approve to open a bank account for foreigners in Switzerland. Where should you as a customer open a bank account? So this depends a little bit on your needs. We recommend in general to avoid the larger banks because they are not really flexible, and we also recommend to avoid the smaller banks because in general they don't really have the required resources. What we also recommend is that you avoid banks with risky business, for example in trading or on real estate loans. What we like is medium-sized banks which only focus on private banking. Another very, very important point is conflicts of interest. So when in a bank you have a relationship manager, he should follow on one hand the interests of the bank, and on the other hand he should follow your best interests. Obviously that doesn't work. So what is the solution? Actually it's very easy. We recommend to work with independent asset managers like Swiss Re Asset Management, who only work for your best interests, and we only do best-in-class selection of funds. And what we do is we have 3 different investment strategies: conservative with a target return of 7 to 9% per annum, with balanced 8 to 10% per annum, and with growth 9 to 11% per annum. And over the past few years we have achieved extremely good returns. For example, for conservative, over this past 4 years, we have achieved a return of, in average, 11% per annum. With balanced, we have achieved a return of 13.5%, and with growth, we have achieved a very good return of 15% per annum.